What's going on, guys? Philip, a trade genius. All right, pretty important update in this video, and there's so much information to go over at this point because of what's transpired in the last few days breaking out of this consolidation. I'm really just going to have to break this up into a series of videos, but primarily this consolidation plus this breakout equals something that starts with a P, and I think you know what that is. We'll dive into that in this video, but very exciting stuff. We're going to talk about how to trade this next area of structure that we're going to be getting into, and how to measure where we're going and what kind of pullbacks to expect. Very bullish stuff here, guys, and we'll talk about that in further detail in this video, so let's dive into it.
Trade genius.
Guys, really quickly, our specials are running. We have actually run out of time, but they said they would extend it through the weekend. So if you want to get into the room with us, $3.99 gets you into the room. Bob does the ETF stock side. I'm taking care of the cryptos and the binary option trading. $3.99 gets you into the room, gets you the software, trading on the software, and really exciting time, especially with how we're transitioning now back into the altcoin majors and Bitcoin. And I think just getting in the room will help guide you through this. But again, very bullish time right now and a lot of opportunities. So encourage you to check that out. All right. So this structure here, right, consolidating post-halving, right? Post-halving was in May, and just consolidating. And we've shown that's pretty normal. This move here, though, coming out of that consolidation is telling us that we are most likely going into another parabolic structure. So what I'm going to do is show you, remind you guys, we've talked about it in the past, back in like 2019 when that was happening, how this is going to shape up. So what we're going to do as we go through this next phase is a lot of times the videos are going to concentrate on how we're playing out in this parabolic structure and how to play that. So a lot of you guys were hoping to get one final pullback. I think you have to just move on from that at this point and play what's in front of you. You know, trade the charts. There's still going to be a lot of opportunities. I know prices getting up there. We're going to start getting into that realm where it's just really not going to be feasible for most people to own one whole Bitcoin. That's why we were saying make sure you accumulate. But we're going to talk about where this is going. Now, there's some things to note. Obviously, if you look at the technicals, stochastics are grouped very tightly and are heading into what normally is overbought. Now, what you have to understand is there's overbought and then there's embedded, meaning that the stochastic line will just stay up here, and that is your confirmation of a very strong trend. And so typically when we get into those patterns, we see that it holds. If we go back to the 2019, this is the right, this is that Chinese Ponzi that largely fueled this. And I'm going to show you guys more in detail the parabolic structure, but for now, just look at the technicals. You'll notice that the stochastic stays pegged, right? And then the stochastic RSIs tend to drift away and then come back. Remember we talked about like a bow, when you pull back the bowstring, right? And then it shoots it back toward the main trend. So this is just basically showing you a deviation in the overall trend, but this stochastic line really gives you a good indication of the underlying trend structure, okay? So I'm expecting to see something similar. Now what we've done here is we've put in base number 1. Now if you didn't follow our videos from last year about parabolic structure, there are several bases in a parabolic structure, so let's take a look at what that is. All right, gang, so this is Bitcoin in its history has had a few parabolic moves. You know, obviously the most famous one is 2017. Now, typically we see 4, sometimes 5 areas that the price bases in. So you have base 1, 2, 3, 4, 5 in the case of 2017. Base is just another name for balance. And as we've talked about in the past, price is either in balance, finds a balance area, or is out of balance. And that's another name for trending. So very clearly in 2017, you had balance, then you go to a trending environment, imbalance, find another area of balance, imbalance, balance, and so forth. And then you finally have your blow off capitulation. Now, what you'll notice is that the best thing to do in this environment is you wait for base 2 to find its balance. Okay, so that's where we're at now. We've come out of base 1, we're going up into base 2. I think it's very similar to what we're seeing up here, because typically what happens is when you do get those overbought readings, that's usually where base 2 will find a top and then consolidate. So we wait for base 2. And what that does is that gives us an area to pull our measurements. And what's interesting about parabolic structures is they tend to respect Fibonacci levels. So Like in the case of 2019, we were able to pull from base 1 to base 2. And what that did was that actually gave us zones to expect where the other bases would form. In this case, base 3 settled between the 1618 and 2618. And then ultimately, base 4 came in and settled in from 2618 to 4236. Okay, so these are all just standard Fibonacci levels that are in your Fibonacci tool that comes with TradingView and most other trading platforms. So this structure, I expect, these levels I expect to come into play again. But what we want to do first is make sure that we measure from base 1. So this now has become, if we clone this rectangle and bring this guy over here, okay, this now becomes your base 1. Okay, so that's essentially your base 1. And once we get into this and price, comes up, let's say it comes up here, tops out here, and we get kind of like this structure, okay, that becomes base 2. And then you can measure your Fibonacci range there, and all of a sudden we're going to have levels, and that's going to help us measure where this thing is going to end up going. So that's why it's important now to follow along these videos as this develops. Now, we already were supposed to have gotten to our all-time highs in April. Why we didn't, I'm going to blame COVID and the global liquidity crunch that happened in February into March and crashed everything. And now we're out of that. So this 20,000, I think we actually were going to test all-time highs into halving. I think that's what was shaping up. Obviously, COVID had different plans. Central banks of the world have basically poured money, printed fiat to overcome that issue. That's going to just make Bitcoin, that's just fuel for Bitcoin. Bitcoin loves fiat, eats it up. And now, if you look, getting back to our green line, which would be the model, basically the mean of the move, it says that we should see, get back to 19,500 by next month. And look how quickly we're starting to return to the mean after that quick drop in the markets. So I fully expect price to meander up and down around this mean level, and you can see what that means. 2021, we're up over $40,000-$50,000. I think a lot of people that doubted, thought these numbers and everything were just ludicrous, I think are going to understand how finite Bitcoin is and how it performs in an environment where the central banks have basically let the genie out of the bottle at our point of no return when it comes to printing. All right, so really exciting stuff. We got a lot to cover in the next few videos, but again, stick with us. We'll guide you through it. And I think ultimately what we're seeing here, like we said in the last video, is the next leg of the biggest bull run you've ever seen in any commodity ever. And it's very exciting to see. All right, guys, take care. Again, check out our site, tradegenius.co, if you want to get into the room with us. Otherwise, I'll see you on the next video. Thanks, guys, for watching. Bye-bye.
Trade Genius.